The 90s. A magical time when frosted tips were cool, people thought Tamagotchis were the future, and the internet was going to make everyone rich. Enter the dot-com bubble, possibly the most ambitious crossover of hope, hype, and financial disaster the world had seen. Welcome to M Squared. Today, we're diving into the wild rise and fall of the dot-com bubble, what sparked it, how it inflated faster than your ego after one successful DIY project, and why it popped harder than a cheap balloon at a birthday party. Alright, let's set the stage. It's the late 90s, and the internet is the hot new thing. People are still figuring out dial-up, websites look like a PowerPoint fever dream, but tech stocks? Oh, they're skyrocketing. Any company with .com in the name suddenly became a Wall Street darling. Investors were throwing cash at tech startups like they were front row tickets to a Spice Girls reunion tour. It didn't matter if these companies actually made money or even had a business plan. One decent looking website and a dream, boom, instant millions. It was the digital gold rush and everyone wanted in. Even your neighbour Dave was probably launching hottubecommerce.com from his garage. Because why not? If pets.com could sell dog food online and be valued at hundreds of millions, anything was possible. But here's the thing, most of these startups were burning through cash, faster than I burn through snacks during a Netflix marathon. They weren't profitable, and many didn't even know how to become profitable. But that didn't stop the hype train. Venture capitalists were practically begging companies to take their money. The attitude was, who cares if you're losing millions? Growth is all that matters. Spoiler, growth isn't all that matters. By the year 2000, reality started kicking in. Investors finally asked the million-dollar question, when are you actually going to make money? Turns out the answer for most companies was either never or oops. Stock prices began to tumble, and once they started falling, panic spread like a bad chain email. Companies that were worth billions on paper suddenly crashed to zero. Poof, gone. Pets.com, out of business. Webvan, the online grocery service, bankrupt. It was like watching dominoes fall, except those dominoes were tech startups with flashy logos and no revenue. And the impact? Brutal. By 2002, over $5 trillion in market value had evaporated. Trillion. That's not just losing your lunch money. That's like losing the entire cafeteria. Thousands of people lost their jobs and tech stocks tanked. Even giants like Amazon felt the hit. Its stock price dropped by 90%. Yep, the Amazon, was once on life support. Imagine if things had gone a little worse. We might have been buying books from Barnes & Noble right now. Terrifying thought. Now, what did we learn from this bubble? Well, one big takeaway. Just because something's shiny and new doesn't mean it's valuable. Investors and companies realized that growth is great, but you know what's even better? Actually making a profit. After the crash, startups had to get their act together. Investors became way more cautious and tech companies started focusing on sustainable growth, not just vibes and flashy IPOs. Interestingly, while the bubble popping was painful, it cleared the way for real innovation. The internet didn't die. It evolved. Companies like Google and Amazon, which survived the crash, went on to dominate the tech landscape. And hey, somebody had to make it through so we could eventually get memes and free 2-day shipping. Could the dot-com bubble have been avoided? Probably not. The internet was new and people got excited. A little too excited. If investors had pumped the brakes and remembered that businesses need, revenue, things might have been different. But as we've learned, greed tends to hit the gas, not the brakes. That's the story of the dot-com bubble. Wild, chaotic, and a little hilarious in hindsight. Let me know your thoughts in the comments. Thanks for hanging with me. If you liked this video, you're going to love the one on your screen right now. It's packed with even more great information for you to enjoy. Click it and we'll see you on the other side.